Howdy, everybody. Welcome to Liberty Call for Friday, March 14th, 2025. Hope you're having a fantastical day out there in the interwebs. It snowed earlier today, but it's kind of gloomy and a little chilly, but it's not terrible. Most of the snow's melted already, so that is awesome. All right, well, markets are bouncing back with the Dow up at the time, 589 points, and the S&P 500 rising 1.8%, though both are still on track for a fourth straight weekly loss as trade wars linger. The Fed is expected to cut rates later this year, but not until September or December, while consumer sentiment has hit a 2.5-year low. Meanwhile, gold has surged past 3,000 an ounce as investors seek safety, and a government shutdown has been avoided with a 6-month funding deal. So before we break everything down, if you could give me some thumbs up, a like, share, subscribe, or follow, and press the notification bell. All righty, well, let's get into the markets. All right. Dow Jones finished the day up 1.65%, 674 points, closed at 41,487. S&P 500 up 1.99%, 109 points, closed at 5630. NASDAQ up 2.61%, 451 points, closed at 17,754. The VIX was down 11.88% today. It's at 2173. Canada up 1.45, Brazil up 2.69, and Mexico up 1.19. In Europe, Germany was up 1.65, the UK up 1.05, France up 1.13, Netherlands up 0.85, Spain up 1.43, Italy up 1.73, Switzerland up 0.73, and Portugal up also 0.73. Russian exchanges in the green today. The MOEX up 2.34, RTSI up 3.59. And the overnight markets, the Nikkei in Japan was up 0.72%, Australia up 0.52, New Zealand up 0.79. In China, the Shanghai was up 1.81. Shenzhen component up 2.25, China A50 up 3% flat, DJ Shanghai up 1.97, Hang Seng up 2.12, and the Taiwan weighted up 0.03. All right, so those are the markets. There we are. Let's bring up our chart and see how things did for the week. Like they said earlier, probably going to be in the red. So starting out with the Dow. We're going to finish the week off about down 3.09%. The S&P 500 down about 2.31. The NASDAQ down 2.59. The Dow Transports down 6.13. And the Dow Utilities, that one's going to finish in the green, up 1.87. So that's the one lone bright spot. All righty. Let's get that off the screen and get back to our data for the week. All righty. Starting out with initial jobless claims, they came in at 220,000. Forecast was 226, previous number 221. Continuing claims came in at 1.87 million. Forecast was 1.9, previous number 1.897. The job openings and labor turnover survey came in at 7.74 million. Forecast was 7.65, previous number 7.508. The small business optimism index came in at 100.7. Forecast was 100.9, previous number was 102.8. So it's been trending down the last few months here. The consumer price index year over year grew at 2.8%. Forecast 2.9, previous number was a 3. And on a month-on-month number, it grew by 0.2%. Forecast was 0.3. Previous number was a half. The federal budget came in under $307 billion. Right, the forecast was 302, so about $4.5 billion over forecast. And the previous number was 129 billion, so it jumped quite a bit. The producer price index year over year grew at 3.2%, below the 3.3 forecast, and below the previous number of 3.7%. Month on month was flat at 0. The forecast was 0.3, and the previous number was a 0.6. And the last bit of data, the Michigan consumer sentiment came in at 57.9. Forecast was 63.1. Previous was 64.7. All right. Let's get into our market recap. S&P 500 rebounds after correction, shrugging off trade war and consumer concerns. Let's see what's going on there. The S&P 500 rebounded on Friday, recovering from its slide into correction territory as tech stocks led a rally, despite ongoing trade war concerns and a sharp drop in consumer sentiment. The SP 500 had fallen 1.4% on Thursday, officially entering correction territory with a 10% decline from recent highs. However, Nvidia surged more than 4%, snapping a 3-week losing streak and leading a broader tech recovery. Semiconductor stocks and other key tech players followed suit, helping lift sentiment. On the earnings front, Ulta Beauty climbed over 12% after posting strong fourth quarter results, while Semtech Corporation soared 18% after issuing a better than expected outlook for Q1. The University of Michigan's Consumer Sentiment Index fell to 57.9 in March, the lowest since November of 22, as concerns over tariffs and economic uncertainty weigh on consumers. Expectations for personal finances and stock market conditions also deteriorated. Inflation expectations jumped to 4.9% for the next year, up from 4.3%, with long-term inflation fears rising to 3.9%, marking the biggest monthly increase since 1993. Late Thursday, Senate Majority Leader Chuck Schumer backed a Republican stopgap funding bill, easing fears of a government shutdown. I remember yesterday afternoon he was saying he wasn't going to do it. I guess he changed his mind. The House passed the bill earlier in the weekend. Schumer support ensures its passage before the Friday night deadline. I'm not sure if they've actually passed it. I've seen them yapping on TV all day. President Donald Trump threatened a 200% tariff on European alcoholic beverages after the EU imposed a 50% tax on U.S. whiskey. This escalation has raised fears of higher inflation and a potential recession. Meanwhile, Tesla rose 3.4% after reports surfaced that it had plans to release a more affordable Model Y in China, aiming to defend its market share amid falling sales and regulatory concerns. All right, so that's that. Get to our next article here from Zero Hedge. Which states import the most from Canada and Mexico? I wonder. So let's see. All righty. Well, get my notes up here. Following Donald Trump's 25% tariff on Canada and Mexico, coupled with retaliatory tariffs from Canada, trade across North America has become significantly more expensive. This disruption affects certain U.S. states more than others, as some rely heavily on imports from countries our country's northern and southern neighbors. According to the U.S. International Trade Administration, Canada and Mexico accounted for 28% of total U.S. goods imported in 2024, but individual state dependencies vary widely. Montana leads with 93%. Here's over here on the chart. 93 is the top of its imports coming from Canada and Mexico, followed by Maine at 72, North Dakota 71, and Vermont 71 also, all of which share a border with Canada. Montana's import dependence is primarily on Canada, where 92% of its imports originate, with oil and gas making up 76% of the total. In the southern U.S., Oklahoma, 56%, Texas, 49% stand out. Oklahoma's imports are primarily from Canada, 50%, mainly oil and gas, 79%, while Texas is more reliant on Mexico, 40%, with motor vehicles, 23%, and computer equipment, 22%, topping its import list. As tariff policies evolve, states heavily relying on North American trade may face significant economic strain due to rising costs, impacting industries and consumers alike. So, all right. Yeah, the bottom one was Hawaii at 6%. That probably has to do with everything having to come via plane or boat. Can't drive stuff to Hawaii, at least yet. There's not that bridge that goes across the Pacific yet. All right, got one more article here. Where is it? There it is. All right, also from Zero Hedge, Stupidity and the 5 Laws Not to Follow. It's written by Lance Roberts of realinvestmentadvice.com. All right, investing is hard and human stupidity makes it harder. In a recent article, Lance Roberts explores why markets remain overvalued, why investors keep making the same mistakes, and how behavioral biases drive irrational financial decisions. Roberts highlights Joe Wiggins' 5 reasons investors fail. 1, sensible decisions can make us look stupid. 2, even with foresight, markets don't always react logically. 3, market sentiment can override fundamentals. 4, a long-term view doesn't guarantee success. And 5, extreme valuations matter. Currently, stocks are trading at historically high valuations, surpassing the dot-com and financial crisis peaks. Investors caught in euphoria justify these extreme prices with flawed reasoning, corporate efficiency, Fed intervention, and technological dominance. But as Roberts warns, rationalizing overvaluation never ends well. Drawing from Carlo Capillo's 5 Laws of Stupidity, Roberts argues that investors consistently underestimate the power of stupidity. Herd mentality leads to buying high and selling low, while confirmation bias traps investors into echo chambers. Many rely on sensationalist media, YouTube influencers, or financial, quote, experts, end quote, with no real market experience. Stupidity in investing manifests in 2 dangerous extremes: doomsayers predicting constant crashes and blind bulls assuming markets will always go up. Both approaches fail because they ignore market cycles. Smart investors participate in rising markets but protect capital when risk increases. The herd versus smart investors. The non-stupid investor doesn't follow the herd, but understands risks and reward. Instead of constantly trying to get back to even, they focus on buying cheap and selling high and avoiding major losses. As Roberts warns, investing isn't about hype, it's about discipline. Totally agree. All right. Good stuff for this week. So, all righty. Well, I hope everyone out there, let me get to what I need to say to you first. If anyone needs to reach me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be happy to help. All right. Well, hope that everyone out there has a wonderful weekend, and I'll talk to everyone again next time. Adios.